Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting it down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Massar and Katie Greifeld. We welcome our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. An eye on the equity market here with the NASDAQ, Carol, holding on to some gains on the day, but all the other major indices lower. The Russell, which of course has a huge component of bank stocks, down about 1.6% here on a day where we should point out Treasury yields, a 2-year Treasury yield, down 57 basis points.
Pretty remarkable, right? And such a change of tune from what we saw certainly last week here. And I'm just thinking about how many days until the next Fed meeting. What is it that will ultimately shape the Fed's decision, Katie, when they sit down to make the second rate move of the year?
And you have to imagine the CPI numbers that we're going to get at 8:30 a.m. tomorrow will play some factor in that decision. But I mean, if you look at the markets right now, it feels like CPI has really taken a back seat to just mapping the fallout from SVB.
Not even that, but also the PPI number as well. And then we've got retail sales later on in the week. How much of that really matters right now if there's something fundamentally broken in the economy?
I don't know. I mean, that's the whole debate, though. Is there something really fundamentally broken with the economy, or is there something just fundamentally broken with SVB and maybe the universe of companies surrounding that? And
but isn't that what we're trying to figure out, right?
Well, yeah. Well, and that's what the Fed is going to have to debate. I mean, I think whatever they were going to go into that meeting talking about, let's just say there's been a couple other points added to the agenda.
The other thing, though, and Katie, you brought this up too. I mean, and we all did. Like, we're still fighting inflation. We still have a ways to go, and that is certainly that makes it much more difficult, Romaine, for the Fed in terms of what to do.
All right, folks, we're getting the closing bells here in New York. The Dow Jones Industrial Average is going to finish the day down roughly about 0.3%. It's down about 80 points as we wait for these numbers to settle. The S&P 500 down about 6 points, or about 0.1% here on the day. And the NASDAQ Composite down higher by about 0.5% here. We should point out some breaking news crossing the wire right now. This coming out of the Fed, that the Fed is going to probe its supervision of SVB and release a review by May 1st. Remember, folks, there's been a lot of discussion here about why we didn't know what we now know, and the Federal Reserve planning a review of this situation that will be led by the Vice Chair of Supervision, Michael Barr, and that they will publicly release that report by May 1st. And guys, I mean, just not to get us off track here, but I just want to bring you back into this conversation because this really brings up a lot of broader issues, I think, about why SVB was allowed to have such a wide liquidity mismatch in a way that would not have been allowed if you were a Citigroup or a JP Morgan or a Bank of America, those systemically important banks. I know SVB wasn't in that category. Should they have been?
Well, I bet there's a little bit of a political debate going on, right, in terms of moves to expand certainly the oversight when it comes to regulators and more of the banking sector, if you will. And there is that thinking, right? We were talking with Matt Levine. We should expect that at some point, that this is going to be an expansion of regulatory oversight, especially as we think about shadow banking, the private markets. Yeah. There's a lot more that needs to be watched.
And let's not forget as well that the Dodd-Frank was actually watered down during the last couple of years. So maybe SVB would have fit that profile before, but after it was watered down, it basically fell out of that category.
Hey, Scarlett, I know you're going to get to some of the sector movers. I just want to point out the KBW Bank Index, the BKX, closing down 12% here on the day. Single worst day for that index going back to March 16th of 2020.
And you see that reflected here in the sector performances, too, because financials, big cap financials, leading the way down for the S&P 500, which closed off by 0.1%. You see banks and insurers at the very bottom here, banks losing 7% on the day, insurers losing 2.9%, diversified financials off by 2%. So very much financials dragging the S&P 500 lower. On the upside, Lori Calvasino was just telling us that she's somewhat encouraged by the rotation into some of the sectors, like technology, for instance, real estate and utilities, bond proxies, both doing very well, up at least 1.5%. Carol?
All right, so let's get to some of the individual gainers, certainly in today's session. And what's really interesting is, it's not banks, folks. It's a lot of other names, and there's some special situations. Illumina, it is topping the S&P 500 and the NASDAQ 100, soaring after a Wall Street Journal report that activist investor Carl Icahn plans to nominate 3 people to that company's board. And so we are seeing some movement, certainly. That name was up almost 17% in today's session. Let's also go to CGen. This was another big one. special situation. Pfizer buying the cancer drug maker for $43 billion. So no surprise to see a pop in that. Target up almost 15%, CGen. And Moderna also atop the indices when it comes to movement to the upside. Cowen upgrading the biotech company to outperform from market perform, raising the price target on that name to 180 from 150. So that stock, Moderna, up almost 7%, closing at 147, almost 148 in today's session, Katie.
And if you look at the decliners, I mean, got to talk about the banks today, because that pain was really widespread as we think about the contagion, at least from a market's perspective, of SVB. So let's look at First Republic Bank. Of course, it's another regional bank. It said on Sunday that it had about $70 billion in unused liquidity to fund its operations. But even still, I mean, you can see the shares down by the most on record. I also wanted to talk about KeyCorp. It's another regional lender, also in the Hurt Locker. Shares finished about 27% lower, so that is the worst decline since October 2008. And Schwab, of course, it's a brokerage firm. It also owns a bank. It's said that it has ample liquidity. That did seem like it soothed investors somewhat. Shares had been down somewhere over 20%, finished about 11.5% lower.
All right, let's get a quick check at yields here, because less than a week ago, guys, we had a 2-year yield above 5%. Right now, it is below 4%, and the drop today, 56 basis points. We haven't seen a drop on the 2-year yield on a basis point level like this going back to October of 2008, if you can believe it. One of the most amazing days that we've seen across equity markets and, of course, in the yield space as well. And now we go back to that breaking news that we just got. The Federal Reserve launching an internal review of its supervision and regulation of Silicon Valley Bank after that bank's failure. Bloomberg International Economics and Policy correspondent Michael McKee joining us right now to talk a little bit more about this. Mike, what do we know?
Well, the Fed is adopting what the Vice Chair for Supervision, Michael Barr, calls humility. And he says they will conduct a careful and thorough review of how they supervised and regulated Silicon Valley Bank. There's been a lot of critics over the weekend suggesting that the problems with the bank were sort of hiding in plain sight, and they should have been recognized by regulators. So the Fed's going to take a look at it and find out where they went wrong. They say they will publicly release the study by May 1st, so it's going to be fairly quick. One senior Fed official today said to me, the banking system may be good, but there are always going to be bad banks. Badly run banks, so there is definitely a reason to look at their supervisory practices and see how they can fix them.
Mike, this is one of the things that the Fed does, but how do you think about this? And then, of course, that upcoming Fed meeting on March 22nd, how do you kind of put it together?
Well, I think this goes beyond that Fed meeting. What will determine what the Fed does is how we get through the next 10 days in terms of the markets. And so far, so good. Some banks struggling today, obviously, but overall the markets generally reacting positively to the bailout plan. And then what the CPI looks like tomorrow, and to a lesser extent PPI on Wednesday. If it does look like there is progress still being made on inflation and the Fed is okay with the way markets are going, then it's a tough call. But if there's a jump in inflation, the Fed is probably going to lean towards still doing 25 basis points.
Right. That's a separate battle that the Fed has to fight, which I guess goes to the idea that the Fed does many things. We talk about it in terms of its monetary policy setting role, but of course it is a regulator to the banks. Give us an idea of the structure of the central bank. Is there a Chinese wall between its supervisory role and the monetary policy setting role here?
There's not a Chinese wall. It's two different divisions of the bank, but Michael Barr, the Vice Chairman for Supervision, bridges the two. And it's always been done, even before we had an official Vice Chair for Supervision coming out of the Dodd-Frank regulations. We had we had a member of the Fed board who oversaw the supervisory roles. That was Dan Tarullo before we had the Lael Brainerd in that role. So you do have a mixture of both. The Fed also always has a banker on its board. Right now, that's Mickey Bowman, who was a Kansas banker and worked in bank supervision. So there's a lot of overlap there.
All right, Michael McKee there helping us break this news here. The Fed officially announcing the probe of what happened with SVB and getting to this idea here that they will release that report by May 1st, guys.
Yeah, I think it's interesting, right? And I think at this point, we're seeing all the regulators. We certainly saw it over the weekend that, jumping on this, trying to get the transparency out there to investors and to the marketplace to hopefully calm things and hopefully be a much more informed market going forward. And this is certainly what we're grappling in, and that's certainly the environment.
And we should point out, this still isn't over. There's another headline crossing the wire. This attributed to the Wall Street Journal that there will be another auction with regards to the FDIC trying to offload some of these assets with regards to SVB. Again, that's attributable to the Wall Street Journal.
All right, certainly something and an ongoing story, as we all know, and continuing to track. All right, guys, that's a wrap. A lot going on this Monday. Our cross-platform coverage on radio, TV, on YouTube, and Bloomberg Originals Beyond the Bell. We will see you again, same time, same place tomorrow.